Welcome to part second of the video. Part second of the concept known as commodities trade finance. And this would be more interesting than part one. Guys, I have a statistics provided by Standard and Poor. This is the article which I'm using from Standard and Poor. Guys, there are many people in commodities. Number one would be the producers, refiners, middlemen, hedge funds, proprietary desk, arbitrators. The list is endless. You must be thinking, let's take an example of Saudi Aramco, the largest oil player of the globe. Just look at their balance sheet and check how much debt they have. Let's talk about ExxonMobil. ExxonMobil, the largest petrochemical company of the globe. Visit their balance sheet and check how much debt they have. Let's talk about the big energy players like Glencore, BHP, many. Check their balance sheets and you see how much debt they have. Guys, we always tend to feel that these big names do not have debt because we do not have the time to look at the annual report of these companies. We do not have time. We are very busy people because we rely on media, and media never reveals the fact. Never reveals the fact. Now, the funding these companies are taking, from where this funding is coming? This funding is coming only from two routes. Number one, either they take the direct credit line from the bank. And when I say credit line, it is different from line of credit because for 99.9% people, credit line and line of credit have no difference. But credit line and line of difference are like Sri Lanka and Singapore. Both are different. So when we talk about these big players, they take credit line from the big banks. From where the banks fund the credit line is the depositor money. So let's take an example. It's an example that Goldman Sachs has given a credit line to Saudi Aramco to the tune of $5 billion. Now, from where did this 5 billion coming? This 5 billion is coming from the depositor money. The money which is being deposited by the depositor, and whatever 0.5% or 1% interest he is getting, while Goldman is lending to Aramco at a much higher rate. Of course, there is always a risk. History is witness that even the American banks who claim to be a superman, by the way, they lost it. But line of credit is of two types. Sorry, credit line is of two types. Number one, either it is based on some cash. So Saudi Aramco, who have huge oil fields, of course it's a capex denominated business, maintenance of the oil fields, insurance contracts, the shipping cost, and regular drilling of the oil fields, and huge cost. For that, you need a consistent source of funding, and that funding is coming from the bank. But bank hold two ways. Number one, they give you a cash option, which is they give you just like a revolver credit. Sometimes they give you auto revolver credit. Sometimes they give you multi-currency auto revolver credit. All three are different. So Aramco can use either of that. Of course, the better facility you take, the better cost you need to shell out. That's very important to understand. Alternatively, they give an instrument like standby letter of credit, bank guarantee, standby bank guarantee, subordinate bonds, and the list is endless. But after 2020, when the world faced Corona, the strength of the bank's balance sheet weakened. It has weakened to the highest extent. So banks are currently not in a position to give a cash credit line like revolver loan, multi-currency revolver loan. They are not in a position to give that. They are in a position to give trade finance, which is known as commodities trade finance, just like commodities SBLC. Example, Goldman Sachs gave 5 billion SBLC to Aramco. And Aramco is like, they would be using $1 billion at a given point of time because for their capex, expansion, and whatever you understand. And rest 4 billion is open. So rest 4 billion is subject to commitment cost, and rest is subject to your actual funding cost, which keeps changing. Nowadays, due to ESG, environmental, social, and governance, you have KPI compliances. Anyways, we'll talk this later, which is known as the term sheet structure. Now, Goldman Sachs is not giving any cash to Saudi Aramco. Goldman Sachs is saying, you are developing an oil field, Aramco. You end up a capex, so you need to pay to the vendor who is developing the oil field for you. Rather than you paying to the vendor, you just happy with the work, whatever he is doing or up to, we will pay. Because this kind of funding is easily available in the interbank. Remember guys, commodities trade finance is also funded in the interbank market. Sometimes it is funded by interdealer brokers. So don't be in an impression that it is not funded in the interbank market. It is funded in the interbank market. That is very important to understand. But having said that, there are catches. And what the hell? The catches is when you have the SPLC in your books, you can use this in a 10 different ways compared to the revolver line. But that's again dependent on the strength of that treasury function. Sometimes what happens, the big players like Aramco, ExxonMobil, Reliance, and many big players, they take funding from multiple banks. They take funding in multiple currencies. And I don't think it's a wrong move. It's a right move because one should not be dependent on one bank. Example, ABN AMRO long ago, sometime in 2020, decided to wind up their agriculture trade financing business, basically their commodities desk. It had a ripple impact on the market. So suppose X company is completely dependent on ABN AMRO for the funding. This company is on toss. They don't have a source of funding because ABN AMRO decided to wind up their commodities trade finance business. All the instruments done by ABN AMRO are subject to repricing in the interbank market, and all the clients of ABN AMRO now needs to choose another bank. Some may get bank, some might not get the bank. So when we speak about commodities trade finance, we need to understand the importance of credit line. I repeat, credit line, not line of credit. Now this credit line is dependent on the strength of bank balance sheet. But after Corona, no one is giving revolving loan, auto revolving loan, multi-currency revolving loan, and such kind of structures. Or even if somebody is giving, then these are very expensive, I would say, very expensive, and should be. So now they are moving to structures like SBLC, bank guarantee, letter of credit, revolving letter of credit, and standby letter of credit, standby bank guarantee, subordinate bonds, and many. Which is, I think, a rightest move, to be honest. This is Rahul Magan from Treasury Consulting Group. You know my personal number +91 9899242978. Alternatively, you can have our back office number, which is +91 9818485155. Have a great time ahead.